You're listening to the Pursuing Alpha podcast, hosted by Charles Brandon Snyder.
And it goes back to great parables inside of there, but I digress. Like the more service you provide to other people, it's rewarded, right?
Yep.
Here's the funny thing, because you're saying something about banks, and we talked about this offline before we got on. The banking industry has been flipped on its head in the last 12 months.
Oh, yeah.
And so, I mean, we're looking at a lot of projects. We're doing some projects inside of there. And I go, man, some of the things that you have this mechanism that's worked a whole lot, and it's been nice and simple, and you've done it. And now they're all of a sudden, they changed the rules. They moved the goalpost.
Yeah.
And now it's like, hey, how do you find that happy medium? So I always encourage entrepreneurs when they do look at it like, hey, I have a lot of them coming to me right now going, I used to get this loan all the time. I used to be able to do this all the time. I used to be able to do this. And now the covenants are 10 times more. They want more collateral. They want more deposits down.
Yep.
They have all of these other criteria they didn't have 12 months ago. And I go, look, the banking industry is not in a good spot right now. And so they're not wanting to make more loans. They're wanting to make less, and they want top tier risk. They don't want that middle bucket. So in order for them to take risk, you have to be top tier from a credit standpoint, from a liquidity standpoint, also from a processing and servicing and making it easy and knowing that the reputation's there. So it's a difficult deal where I think you got to look at it from both ways on there. But you're spot on if you come prepared, you make it simple, and you service other people to make their job easier, you're going to get better results.
It's the whole control what you can control.
Yep.
What you can't control. And there's a lot you can't control, right? I think I was so fortunate that my first foray into the real estate world as an agent, an investor, and so forth, is I was underneath Greg Garrett, and he had a real estate arm that I was kind of under, but he was also the president of a bank. So I kind of had the privilege, being a curious human being, to just constantly ask him the banking questions. I was like, so what do y'all talk about in loan committee? And what are you looking for? And what's happening? And I literally kind of got the curtain pulled back, and my little curiosity and my financial brain grasped early on in my career, what is it that bankers and loan committees are looking for? And then he started telling me, he goes, well, what most people don't realize is we as a loan committee may look at a client project proposal and we love it, but we just had the auditors, the Fed auditors, the state auditors, the FDIC come into our bank, and literally they'll look at our loan portfolio and they'll go, you guys are actually doing pretty good here, but guess what? You've got one borrower here who that loan and that LTV and that risk profile, it's perfect. But you know what? He's got lots of other loans at other banks. And because we don't like his profile, globally, we're going to ding your profile, your portfolio. So we don't want you lending in, we don't want you to fill up your bucket with more commercial, industrial, ag loans, business loans, SBA loans, real estate loans, whatever the restriction is. The Fed's coming to their team and going, you can't limit, restrict. And so guess what loan committee's now doing? Well, last week we had no problem with this guy. This week, we still have no problem with this borrower, this project, but the Fed is just hitting us hard.
But they won't be honest about it.
No, they will. You will never know that.
You will never know
that.
This is the biggest bitch I have against banks.
Yep.
And I've talked to a lot of lenders, a lot of bank presidents, a lot of deals. And this is the problem, like the magic curtain, the backroom BS that you have.
The magic curtain, you don't actually know.
You don't actually know what's inside of a loan committee and how they do that. And so it is a real thing for concentration limits inside of different sectors. And that is one thing everybody's got to wrap their head around is because you could have the perfect project for perfect business, but if they're not doing CRE and they're not doing ground up construction and commercial real estate, they're not going to bank you no matter how good your project is. And so I always go to my guys, and it's weird in my world, we're counseling more business owners to not stay at one bank.
Yeah.
We're counseling business owners.
Which is kind of opposite of what you were told for 15, 20 years.
Build a banking relationship.
Yeah, that's right.
Build a banking relationship. Now I said, you build that banking relationship with one bank, you're just waiting for them to pull the rug out from under you. And then you have no recourse. And starting a new banking relationship is 10 times harder.
Yeah.
So go and get 3 banks day
That's
one.
Exactly right.
Put more assets inside of each one of them, have auto loans with one, right? And give them a mix of everything inside there. So if one doesn't have it, here's the funny thing is, and this is why you have bank I don't even know what their technical title is. Loan officers and all that stuff. They're
Vice presidents.
They're all vice presidents. And I got some good friends. I've had some banks on here, but they're all vice
They're
presidents.
all vice presidents.
Yeah.
Yeah.
But they come on and they're relationship guys, right?
Yeah.
And they want you to bank 100% with them. Because if you bank 100% with them, they have complete control. When they have complete control,
Like, oh, by the way, now we were doing a 90% LTV, 80%. Now we're dropped down to 65. You need to plunk down more equity, and you're quite frankly screwed because you don't have that other relationship to go to.
yeah, absolutely. Or rate was 625, now it's 650, and we're going to go ahead and change the rates. It wasn't our fault. Fed raised rates, right? And I'm going, that's funny. This bank over here said that they'll do the deal, right? So you took yourself out of a position where you put yourself in a corner, and you have no other recourse but to take a bad loan. I sat down with a client. This is the most absurd thing I've ever seen in my life. I've worked with banks for a long time. They came into a new construction, and they put a collar on it where it was 2 years construction loan for 8.75%, a 5-year surrender. So if you refinance that loan in 5 years, it was a 5% takeout fee. So you couldn't take that loan out, but it's only a two-year construction loan that rolled into a 20-year loan of 8.75% with the collar on it. Couldn't go less than 7.5%. Both
couldn't go less than 7.5%. Even if prime drops to 3.
That's the point. With another 7-year breakup fee inside of that one. So they literally locked you into a 9-year loan where no matter where rates were going to go, they were going to get 7.5%, right? But unlimited upside. So it wasn't even a collar, it was just a floor, excuse me. So it was just, if it went to 12, they got to reprice you every 3 years. But if it went down to 4.5, 5, they're not going to reprice you, right?